most trusted name in news.
This is CNN Breaking News.
Just under a minute now until the opening bell on Wall Street. A sell-off that started 11 days ago and led to yesterday's historic drop in the Dow is on track to continue. Joining me again to make sense of it all, Chief Business Correspondent Christine Romans, along with CNN economic analyst Rana Foroohar and Stephen Moore. As we look at all of this, there's been a lot of talk as we're all trying to figure out exactly where the Dow is going to open. There's also this talk of a correction. You say we should be focusing on a magic number.
Yeah, the magic number here is 390. If the Dow Jones Industrial Average falls 390 points, that would be fulfilling a correction. What is a correction? That's a technical term for a market that falls 10% from its recent high. Corrections are supposed to be healthy for a stock market. We haven't had one in so long.
Doesn't feel healthy.
No, I know.
Yeah, but
we haven't had one in so long.
It's normal.
Absolutely. So I think you're going to see several hundred points off the Dow here when we finally start seeing the numbers come up. Yesterday was pretty ugly. 1,100 Dow points lost yesterday. That's a record. Never have seen that many points. But remember, that's 4.6%. That's not even in the top 20 of percentage declines. Think back in 1987, that was 22%.
Yeah, it's really important to talk in percentages. When you talk about just big point drops, it can seem incredibly scary.
There's
but,
your correction.
10% drops back in the, as Christine is saying, 30 years ago, very, very normal. We may be going back to normal here.
Well, and you two just both brought up that point, both you and Stephen, in saying we're not used to this anymore because we have seen this gain and we've seen this rise for so long and it's been sustained that we're out of practice a bit.
I've lived through a lot of these. I remember the 87 crash. I remember what happened in 2008 and 2009. And what's strange about this, let's call it a correction, is that the fundamentals of the economy. I'll read you this headline from yesterday's Wall Street Journal. Corporate earnings shine amid turmoil. 80% of companies exceeded revenue expectations. So the companies seem to be healthy. I mean, profits are the mother's milk of the stock market, right? And profits go up. So you've got that. You've got a good jobs report on Friday. What seems to be spooking the market right now, and you guys correct me if you think I'm wrong, is this fear of inflation.
Yes.
Yeah.
But I just don't see it out there. I mean, there's been some increase in energy prices. Gold price went up a little bit, partly because when people get afraid, they go and buy gold.
Right.
But companies tell me they don't have pricing power. They can't raise their prices.
This is actually a really good point, and I think that this is one of the reasons that we're going to see a lot of volatility in the next few days. There's two storylines here. One is that, we are getting more inflation. Last Friday, we got wage numbers saying, finally wages are rising, and that's actually bad for corporate profits. It's a strange juxtaposition between Wall Street and Main Street.
That's for sure.
But there's another story, and Stephen's right on this. There's another story that actually, if you look at the kind of the longer trend, month by month, we're still not seeing enough inflation to be worried about. Now, this puts the Fed and the new Fed chair, which is a whole nother thing.
Talk about trial by fire.
I know, your first day, you come in and you get what?
But look,
the markets may be testing him.
I want to get back to this point, though, about Wall Street versus Main Street, because we've wanted, as economists, the weakness of the economy for the last decade or two has been wages. They've been stuck.
Yeah.
Now we get a good, decent wage report, and Wall Street freaks out about it. I mean,
it's a good point.
Workers making more money and more people working does not cause inflation. And prosperity doesn't cause inflation. I mean, I just think there's a mindset that's wrong on this.
But the stock market is not reflecting the economy. The stock market can be wildly distorted from the economy, right?
Which I think is important to point out because oftentimes that gets lost. People look at the Dow, they look at one index here too, and they say, oh my gosh, here's what's happening. We're tanking. And the fundamentals that we talked about are strong.
And we have not, there's been FOMO, fear of missing out, for so long, and now it just turned into fear. You could see fear of missing out again. You could find people find a buy point here and say, finally, after 3 years of stock market gains.
One of the world's biggest investors, is saying buy the dip. I think a lot of people are going to buy the dip. It depends
on
how
doing it yet.
it's going to be first. We're still
But the other thing is interest rate. The interest rate story, because obviously inflation and interest rates parallel each other. But I'm old enough to remember in the 70s when we worried about 15, 16% inflation rates. Right now we're talking about whether
2.8% on a 10-year note.
A mortgage. What's the 30-year mortgage now? 3.5%. It might go to 4. I mean, those are hardly numbers for people to be jumping out of windows.
I think complacency is a big issue here. We have been in a bull market. We've been for so long. If you look back 20, 30 years ago, 10% a year drops were totally normal. This market, actually, if it had grown at a historic level, it should be about 25% lower than it is now. So we may have farther to go.
Why do you say that? I mean, because earnings are pretty good.
Well, if you look at historic growth in this market, and you take out the kind kind of incredible unconventional policies that we've had
Right.
over the last few years. The Fed throwing
right,
$4
right.
trillion into the market.
Which is not happening anymore.
Which is not happening anymore, which is another part of this. The Fed's actually pulling back. We knew this was going to happen.
Right.
I mean, Christine and I have been for the last several months saying, watch, there's going to be a correction, there's going to be volatility
But
this year.
for
and here
people
we are.
watching the show who are worried about their 401k plan, as we all are, I mean,
Stephen's
now
wife
is
keeps
not a good time to sell. You know, you don't want to
You make
sell
the
on a
worst
This is the
mistakes.
first mistake that investors
This is when you make a bad mistake. You should be rebalancing like every year for how old you are, how far you are to retirement, and what you, I mean, that's what regular people should do. I will say one thing, though. You used to advise the White House, the Trump White House, the Trump team, and the president has used the stock market as a popularity test.
Yeah, yeah.
Right.
And I think that is something that they're going to have to shift away from, because if you're
Well,
going to
certainly
see,
last week or
no,
so.
honestly,
It's still up 35%.
you know, this is
since
why
he was elected.
presidents don't say, "Hey, look, the
Yeah.
stock market's great because I'm great."
Right.
You know, they don't brag about stock markets for a reason, because this can happen.
It's kind of a rookie mistake. I mean,
frustrating.
presidents, frankly, and this, to be fair, this is true of any president, they don't deserve as much credit
Yep.
or as much
Nor
criticism
as much, no,
as they
but
get for the
should they be?
market.
But if they are going to take some ownership,
Yeah,
of course,
yeah,
the big
you
question
gotta-
here
gotta-
is if you're going to own the rise, you have to own the fall.
Absolutely.
At the same time, even if you're not going to own the fall, Stephen, this is also a good opportunity to come out and say, look, I want to calm your fears. We heard a little bit of that messaging from the White House, but not directly from the president. Is that a missed opportunity?
You mean to talk about calm? I'm missing your.
Just to talk about, hey, you may be seeing this dip, and I've been telling you how
Yeah.
strong the economy is, touting it yesterday in Ohio on
Well,
the
we'll
road,
see if
right?
he makes a statement today.
Right.
Because, you know,
but
if we
would
do
this
get
be
that
a smart move for
correction.
the president to come out and say, hey, don't worry, this
Yeah.
is a correction, and this is happening because wages are strong, we had a strong jobs growth
I agree with you
report.
totally. I mean, he should say exactly what I said. You know, the fundamentals of the
buying
economy,
into
Yeah,
wages,
People
jobs.
are buying the dip now, you can see.
All right,
You can see the
yeah.
buying.
Yay.
And Abby, and speaking